Yo, what is up, everybody? Bradley Walker here.
I'm Jared, aka 7.
In today's video, we are going to give you guys a simple strategy that you can start implementing immediately to start trading the foreign exchange markets more successfully. So we're going to break this down for you guys, show you guys how we utilize this strategy for our trades on a day-to-day basis, and give you guys some insight on the process behind this strategy. So as always, like, comment, subscribe, hit that notification bell to stay up to date with all of our videos. Check out the links in the description of this video. You can get access to our free course where we're going to teach you how to get started trading in the foreign exchange markets, as well as get access to our Discord community, limited time access, 7-day free trial. You can copy our exact trades, get access to our live trading sessions, Q&As, access to our community of traders, and a lot more. So definitely check out the links in the description of this video. We're going to switch over here to the charts and show you guys the simple strategy that we are using.
Let's go.
All right, guys, so jumping right into the charts, you can see here we have these 3 red lines drawn right here on our charts. These are going to be our EMAs, our exponential moving averages. These are going to give you the moving average, the average of the price movement in the last certain time frame. So you can change the time frame. We like to use the 5, the 20, and the 50. So this is going to be a simple strategy. Anytime you will see the 5 cross above the 20 and the 20 above the 5, as you can see right here, we had the 5 right here crossing up over the 20, and then that 5 crossing over the 50. So the 5 is on top of the 20 is on top of the 5. This is called an EMA crossover or an EMA stack. Whenever you see this happening, if the shorter time frames are above the longer time frames, you can see a movement in price to that direction. So right here, you can see when we broke above this, we had this nice clean candle. 5 broke above the 20, 5 broke above the 50, giving us confirmation that this thing was becoming bullish, which you can see right here, it rode out pretty nicely. Same thing here to the downside. We have the 5, the 20, and the 50 EMA. Yeah, so you can see right here, the 5 crosses below the 20 EMA, and then that crosses below the 50 EMA, and you can see what happened here. We had confirmation this thing rode down pretty nicely. So not only can you use this strategy for entry points, you can enter in right about here, and you can see you could have entered in right around 1801 and rode this thing up to around 1808 on gold. So a nice little 70 pip move right there. You can also use it for confirmation to get out of a trade. So when you see that 5 cross back under that 20 EMA, that is good confirmation that the trend is reversing, at least on the short term, and definitely want to get out of that trade. Now you can use this on multi-time frames. Right here we have the 30-minute chart up, but you can use this on multiple different time frames, obviously depending on your trading style. If you're scalping, use it on lower time frames to look for entry points and exit points. You can also use this on higher time frames to get confirmation on long-term trends. And then on top of that, if you're doing swing trading, if the lower time frames and the higher time frames, let's just say from the 15 to the 4-hour or to the daily, if they all align where the EMAs are stacked in one direction, then it's going to give you stronger confirmation that that trend is going in that overall direction. Now, we don't simply rely on this. We just wanted to show you guys this is a simple strategy if you're just getting started that you can start implementing immediately. We also look at multiple different things, SIR zones, price action, fundamental analysis, a lot of different things on top of this, Fibonacci retracements, a lot of different things that we're using on top of this. But this is just a simple way to start identifying price trends and price movements, as well as reversals. So,
all right, guys, also just make sure that you're using discretion, and you see this almost crossed over. Like a bad thing to do right here would get into the buy, and then you see it didn't end up breaking over. So sometimes things like that can happen. So it's good to just know that when it's heading toward crossing over, doesn't mean 100% it's crossing over. Right now the 5 is crossing over the 20, but is this going to keep going up? We don't know. Right. I think I really love to use this for analysis, like after the fact somewhat, but definitely can be used for like live trading, especially depending on the time frame of the chart and stuff. But yeah, definitely little warnings here with these 2 circles that sometimes it can appear to cross over and kind of fake you out. So
definitely. And we pair this with a lot of other things too. So we're not just using this. We're showing you guys this as a simple strategy. When we first got started trading Forex, this was something simple that we could look at to kind of prevent these like little false breakouts like you see right here. You can kind of look right here, wait until they both cross over. Now, again, that is not the only thing you should be looking at. Like, for example, over here where we had this almost crossed over, now we had this starting to cross over.
Yeah.
You could look right here and be like, okay, we're crossing over and we're breaking above this zone. So here would be like one confirmation. Your second confirmation would be an actual breakout of that zone on top of that moving average crossover or the moving average stack. So definitely pair this in with other things that you are using, price action, technical analysis, looking at zones. Definitely pair it in, and don't simply rely on this, but this is just something simple that you guys can start implementing daily to start increasing your chances of becoming successful trading in the markets.
Yeah, one last thing, guys. Another little strategy that we use, or I think it's a really big but simple strategy, is like we literally place trades almost every day, or basically every day, because we do call signals, but it's really become a very successful way of trading. We just place a lot of trades. We're placing normally at least 2 a day. So with that, we're hitting TPs on 70-80% of those. So it's like I'm not right now talking about the process of figuring out which signals to call. I'm just saying that take trades, trust your analysis, and let it hit TP 2 or 3. For us, that works. Obviously, depends on the analysis you're doing and a lot of other factors, but we place a lot of trades and we let them ride out and hit their TPs, and we do mental stop losses a lot. If we have a lot of confirmation that a trade is not breaking a zone, we may let it go negative for a period of time, may let it slightly cross the stop loss, but then it breaks back the other way and comes back and hits our TPs. So definitely. Sometimes we do have trades we've been holding for weeks that are negative. I can say that honestly on my account. But every day I'm hitting a TP. Just hit CAD, JPY, TP, one of Brad's trades. So it's nice having both of us calling signals, because it's like so many trades to be in. But that also promotes safe risk management and like your lot size being logical for your account size. So definitely. But yeah, anyway, not to get into too much, but that's another simple strategy that we do. Basically, take our signals is what I'm saying. Like sign up to the signals, to the 7-day free trial and our free course. But anyway, definitely.
I mean, and that also, when you're taking more, like let's just say you take 5 trades, you can't in 5 trades say if a strategy is working or not. So when you're taking more trades on a consistent basis, it's much easier to look at true analytics and true numbers if on 100 trades per se, rather than 5 trades. So you can actually say after 100 trades, okay, this has been working, this hasn't been working, because you need to be able to average things out and see what is working in the long term. Anything can work, for 2-3 days. It could just be luck, but taking those trades consistently over a longer period of time, you'll be able to find out what works for you.
Yeah, we do like 60 to 100 trades a month, because 20 trading days a month, we do about 2, 3, 4 sometimes a day. A few days we've done more. So yeah, guys, putting in work. So
every single day,
come get some.
Like we said, simple strategy, EMA crossover, EMA stack. There's multiple different names for it. When the lower time frame is crossing over the higher time frames, it can oftentimes give you an early sign that prices are shifting in the other direction. Just definitely pair that with other things and add on to your confirmation. But as always, guys, like, comment, subscribe, hit that notification bell to stay up to date with our videos. Check out the links in the description of this video to actually get started trading in the foreign exchange markets with our free Forex course, as well as get access to our Discord community. And as always, thanks for watching.